Yo, what is up? New Guy Trader here with my latest video. I'm chilling here at RPI, and today I have a video. It's going to be the start of a series on recession resistant or recession proof stocks. Now, the first thing I want to mention is almost all stocks drop during a recession. That's just how it happens. However, there are a few select stocks that didn't drop or in 2008 were actually improved in 2008, but most stocks, even the ones I'm going to talk about today, dropped slightly. The difference is they tended to rebound much quicker, and in general, they dropped a lot less than the rest of the market. So today I'm going to discuss sin stocks, which are stocks that have to do with vice. The first thing, casinos actually do really poor in recession. People are less likely to be willing to waste their money and generally tend to be more frugal. So casinos, not you don't want to get into that for a recession. Junk food generally performs pretty well in a recession. However, they still drop a little bit. And personally, I'm going to steer clear of them because they generally have low dividends. Companies like Hershey, McDonald's, Coca-Cola, Pepsi have dividends about 1 to 2 dividend yields about 1 to 2%. Honestly, it's not worth it because they still drop. And if I want to get a 1 to 2% yield, I'll put my money in a bank, I'll put it in a CD, and it'll be completely safe there. I don't have to deal with the drops. It's not worth it for that small amount of interest. Um, in recessions, size matters. You want to go with big businesses. Big businesses have more resources. They have more people willing to lend them money, and they can play the humanity card. I'm going to reference this a lot. The GM and Chrysler bankruptcies in 2009, they basically said we cannot go bankrupt because a bunch of people will be out of jobs, and the government bailed them out. Another tobacco stocks you want to look into, tobacco stocks. Marlboro is one of the world. It's the largest selling tobacco brand in the world, and it's sold by. It's a weird situation where it's owned by two stock companies. Altria, ticker symbol MO, and Philip Morris, ticker symbol PM. Of the two, I prefer Altria. Altria has a lower dividend yield, but it's only by a tiny amount, and they've been increasing their dividend more each year than PM. They have direct sales rights to new IQOS technology, which it heats the tobacco, but it does not burn it, so it's supposed to be healthier for you. This could potentially become profitable and drive up the stock value. And they have direct sales rights, but they do pay PM a licensing fee. Um, uh, Altria is also more diversified than Philip Morris. They have 10%. They own 10% of Anheuser Busch, 35% of Juul, 45% of Kronos Group, which is a medical marijuana company, and they also have a significant portion of Kraft. They have been down in the past year, but analysts expect them to increase. As I said, they're the number one tobacco company in the world. However, their main market is in the United States, so they are affected by the whims of the FDA. They right now have about a 7.8 dividend and an 80% payout ratio. They're a relatively stable stock. Their beta is 0.35, and they're not overvalued. Their PE is a 13.9. The next competitor to that would be British American Tobacco. It's actually a British stock, but you can buy the ADR, which is BTI. They own several popular companies like Lucky Strike, which is popular worldwide, not as popular in the U.S. Pall Mall and Camel. They have decreased their dividend compared to 2018. They recovered slower in 2008 than did Marlboro. However, they are more internationally invested. Like I said, Lucky Strikes are very popular outside the United States, so they're less affected by the whims of the FDA. They have an 8.8% dividend yield, and it's a 74% payout. They're a little more volatile. Their beta is 0.86, which still isn't that volatile, and their PE is a 10.8, so they're not overvalued at all. One company that would be really good to invest in, I can't find an ADR for it. It's a Chinese company, China National Tobacco. It's state owned, and it basically has a monopoly on Chinese tobacco. Smoking is very popular in China, and it's expanding. China National Tobacco is even looking to expand outside of China. They currently don't offer a dividend, but they have potential for huge growth. So if anyone can find an ADR for that or any way to purchase that in America, definitely leave something in the comments. I'd love to see that. Be happy to share it. The next thing is corrections, which are like for-profit prisons. There are two main companies for that: Core Civic, which ticker symbol CXW, and Geo Group, ticker symbol GEO. Um, Core Civic has about a 7.25% annual growth, and they're a little volatile. Not really. They've got a 1.03 beta. They offer a huge dividend, 10 about 10.25%, and they have about slightly over 100% payout. So they're paying out more than money than they make. Um, that's kind of unusual, but both Core Civic and Geo are REITs, so they're required by law to pay out 90% of their profits to investors. It helps them with taxes. So they could probably recover from this payout. Compared to Geo, they have more adult prisons, where Geo has more juvenile delinquent centers, and the adult prisons are the real money makers. Geo has experienced about 6% growth, and they're a little more stable. They got a 0.96 beta. They have a higher dividend, 11%. However, they're paying out 137% of their profits as dividends, so that's not sustainable. They're more internationally invested, so if any effects of the U.S. will be lesser on them. And like I said before, they have more facilities, but more of them are juvenile delinquent centers, which make less money. There is no definite link between crime and the economy. After the 1950s, crime generally increased with a bad economy. However, in 2008, there was actually less crime than the previous years. There's criminologists, I don't know the word for that. People who study crime are they have different opinions on why. It could be that people are home more after losing their jobs, so stuff's harder to steal. It's more guarded. People simply have less money to steal. But in between 2008 and 2011, there are about 850,000 less arrests each year as compared to 2004 to 2007. The same phenomenon was seen in the Great Depression, where crime actually decreased during the Depression. It all depends on the situation. It could be that the next recession or depression, people just get more desperate and are willing to commit more crimes, or it could be that they're careful. It's going to be a risky investment. Another thing is these stocks recently dropped when candidate Elizabeth Warren announced plans to end the private prison system. If she wins the Democratic primary or even the election, it could cause another drop, which would be a great buying opportunity, because passing a law like that would be very difficult. It would be hard to get all the support, especially with the overcrowded prison system. So an announcement like that, it didn't have a long-term effect on the stocks. The stocks are doing really well now under President Trump because of the apprehensions by ICE. Last thing here I'm going to talk about is alcohol. There's only really one alcohol company worth considering, and that's Anheuser-Busch, the owners of Budweiser. They have 10 beer companies in the U.S. and close to 20 internationally. Right now, they're trading low because of the popularity of craft beers. But when there's a depression, people aren't going to be spending money on craft beers. They want cheap alcohol. They want to get drunk and forget their miseries. Um, their dividend usually fluctuates. It's usually around 4%. Now it's a little lower, about 2%. But they've got a fairly healthy 50% payout ratio, so they're relatively stable. They're well invested. They're spread out across the board. I looked at some other companies like Biagio. I don't know how to pronounce that. It's a British company. It owns Smirnoff and Guinness. There's Coors, Heineken, Constellation, which owns Corona, and Brown-Forman, which owns Jack Daniels. But their dividends, just like the junk food stocks, were generally below 2.5. When you could get a CD at about 3% interest and it's not going to drop, it's a lot more secure, and I'd just put your money in that. So alcohol, tobacco,